Hello, everyone, and welcome to your Onchain update for the 5th of July. And yes, we have some new slides. I'm finally just going back through and cleaning things up, making things look a little bit nicer. And it was long and well and truly overdue to get rid of that blue background. So appreciate everybody for staring at the exact same screen for I don't even know how long. But at the very least, we're into a new era. So look, I'm not a graphic designer, so this is kind of the best I can do. Give me a thumbs up or a thumbs down. Anyway, so what I want to look at today is kind of the growth of leverage and how leverage is starting to change within the system. Obviously, as market starts to rally, we're hovering just below 31,000 at the moment. There's a lot of stuff that would start. People are going to get more confident as markets rally. They get more excited. When they get more excited, they put more leverage on, and at some point in time, that leverage blows up. We have all seen this movie before last cycle, and it will happen again. But the question is, how close are we? So that's going to be the question we're going to explore. We're going to look at things from a couple of different angles today. The first one is going to be leverage in the derivatives and options space. Then we're going to look at things across the exchange front and really understand what's going on in the exchange balances, because that's obviously where spot coins are flowing out of. And then we're going to have and close out on basically looking at entities and hodl waves. So trying to assess what does that buy side look like? If we're seeing outflows from exchanges, how do we characterize those? Okay, so the first thing that I want to start off with is our funding rate. Now, funding rate is a really nice way to just gauge what's going on when it comes to futures markets. Now, the primary reason for this is futures markets, if you go back to the commodity era, commodities have an actual storage cost. I mean, I don't know how many of you have got a barrel of oil sitting in your house, but it's not a very pleasant thing to have around. So the concept is that I may not need oil today as a business or an entity or a government. I don't need oil today, but I will need it in 3 months' time. So, and as an oil producer, I want to sell that oil in 3 months' time and have a guaranteed buyer. What I don't want to do is either pump all of it now and then just sell it for the rest of the year. I essentially want to pump, produce, and sell right as these things go. Same for all commodities. There is a storage, a logistics, a delivery, all of these physical constraints. Now, Bitcoin has no such things. So what we've seen is that rather than having what we call calendar futures, futures that actually expire on the 31st of December, 2023, we've seen that the perpetual swap has become the dominant market. And basically, this is a never expiring future. And rather than having some kind of roll cost, the futures price is going to reflect the kind of the physical constraints, the logistics, the storage cost, all of these things that you're paying for between now and that 3 month away date. For Bitcoin, there's kind of no such thing. So perps have dominated, and the way it keeps prices of the future near the actual spot is using an interest rate, which is what the funding rate really is. Now, we've basically seen that for, let's call this 18 months, there has been very, very little. It's kind of been dead up until the start of this year. Now, what you can see is that life was breathed into it after FTX. We saw a bit of a return, right? This nice little negative dip that we saw here on the sell-off, this is good. This was kind of telling us that people were still very, very bearish. During this correction, however, we have not seen that decay. So to me, this is a regime shift. We are now in an era where, and I've mentioned this before, above 30,000, we start getting into the territory where people are more likely to take risk. Things could get a little bit silly, and therefore the risks will start to grow. So this is kind of my first sign that we did not get the kind of major correction in funding rates. In fact, it built more positive during this correction. And that's okay because the levels we're currently at, 5% on a 3 month basis, 8.6 on a futures basis. All of these things are kind of, the treasury yields 5.2%. So a Bitcoin futures contract yielding 8, yeah, that's okay. To me, that makes a whole lot of sense. It doesn't feel ridiculous. This is ridiculous, right? This is 100 and something percent, 89%, 100% annualized. Just that is ridiculous. So when we start seeing this kind of stuff, it's scary times. But obviously, it can keep going through that period. But nevertheless, this is kind of levels that we've seen a regime shift. It's not extremely high at the moment, but quite clearly something changed back here in late December, right? We obviously know that because we're up, over 100% since then. So since December, we've seen life come back into this market. The skepticism on dips appears to have disappeared. Therefore, we can start building this body of evidence that things aren't silly yet, but they may get silly in the near future. Just putting things into perspective. Okay, so let's just have a quick snapshot at a couple more futures related, then we'll jump into options. We can see that on a USD basis, open interest has climbed alongside price. So there is a little bit more open interest in the market. We're kind of at pre-FTX levels, right? Minus FTX, because it's obviously not around anymore. So we've kind of come back to that level of $13.3 billion. Again, it's not silly season yet, but it is kind of, it's getting to the point now where it's building. It is no longer in decline. It's no longer flat. It's starting to pick up just a little bit. More or less, we're looking at a regime shift. Volumes have not really picked up. There's been a bit of a spike of late, but we haven't yet seen that kind of major uptrend. It is obviously much healthier than it was back here in December, but again, this is very early in this trend. It's just kind of growing. It doesn't feel overly speculative at this point in time. In fact, it feels quite healthy. But at the same time, we're at the point where things could start to accelerate, right? We're kind of seeing that just phase shift a little bit. Now, it's always good to look at things in perspective, whether you price your open interest in BTC rather than USD, or in these instances, we're comparing it to Bitcoin's market cap on the right-hand side, or to the balance of spot on the exchanges. So this is a relative amount of leverage, and this is kind of what I'm saying. It's kind of still pretty flat. There isn't a great deal of leverage in the system. So even though it's starting to build, it's a healthy form, and it hasn't reached a level where you're like, whoa, we're starting to get a bit stupid. It's still very, very tame relative to market size, spot volume, spot exchange balances. Everything at the moment looks relatively okay, just starting to see that first sign. Now, the options market, this is actually a really interesting phase shift. We've not seen this before. Options open interest is absolutely mooning, 13.4, now well and truly above futures. So you can see here, this is getting up towards the all-time highs. The market is preferring to use options to trade. Options volume is also very high. This is a really, really interesting dynamic. Now, most of this trade volume is happening on either Binance or Deribit being the primary venue. This is kind of a very interesting shift. And I prefer that the market is speculating with a bit of options leverage, because options are a defined risk. If you're a seller of options, these are normally very sophisticated actors, market makers. They generally know what they're doing. People who are buying options, it's like buying an insurance contract. If you don't crash your car, you don't go back to your insurance company and say, I want my money back. That is the price of doing business. So it's a defined amount of risk. If you don't crash your car, you only lose the premium. That's essentially how these things work. So in many ways, people speculating on options, to me, it tells me two things. It tells me three things. One, it's a healthier form of leverage because it's a fixed and defined risk. The second thing is it tells me it's a bit more of a mature market, because options are not kind of the easiest instruments to understand. They're much more complex. They're actually a beautiful instrument. I was having a chat the other day about these. They're a fascinating. Just the way that they work. When you understand options, it makes a lot more of the financial system make sense. And there was a third thing which I've completely forgotten. So anyway, to my view, it's a more mature market. It's a healthier form of leverage. And to me, it's kind of telling us that we're starting to grow up, right? So I think these are all good things to see playing out. What I do want to jump across and have a look at, let me just quickly grab on our put versus call, right? So this is call open interest in green versus puts. We can see here that we have a lot more put buying. Notice that the put buying spikes on the rallies, right? This is literally people buying call options. Oh, I just remember that thing. The reason why call options are interesting is we're obviously in a tighter monetary regime. So the third thing that it reminds me of is that people who don't want to go out and spend, 30 grand on and having a one BTC spot position, they can put out a, $500, $1,000, whatever it is. They just pay the premium to get exposure to the asset while their capital is getting blown up in bonds or equities or whatever else it's doing in the world. You can get exposure, leveraged exposure to the asset class without having to allocate full volume to it. So in that way, it's allowing people to be a bit more capital efficient in their allocation. They're not necessarily getting spot exposure, but they are getting exposure through options, which is essentially a levered play. So anyway, you can see here that we have this call buying that happens during these peaks, right? People who are buying options at kind of the wrong time, right? If you're going to be buying calls, you want to be buying it when the market's selling off and being the contrarian, but this is how these things play out. So just to put a real bow on that concept, looking at the option space here, we're looking at the end of July. And you can kind of see, I mean, it's still a bit call heavy, but it's kind of nicely balanced, right? So 1 month out, or the end of this month, things are kind of fairly healthy, fairly balanced. And really what the market's kind of telling you here is that price is probably going to close somewhere in and around where we currently are. There's not a great deal of momentum in either direction. A lot of these calls will probably expire worthless. We'll see how that plays out. That said, there's a lot that are actually quite close to the money. So it could be, I mean, again, options don't necessarily drive everything, but given how big they are right now, the options max pain point may in fact start to have a little bit more weight to it, right? Because they're starting to get larger. So therefore we can start really thinking about where is that max pain point. And to be honest, I mean, just visualizing, I haven't actually run the calculations. Max pain is where are the most amount of options going to expire worthless. So these are all out of the money in the calls. These are all out of the money in the puts. Where's max pain? Pretty much exactly where we currently are, about 30K. So in a month's time, we'll check in. Now, as we move out towards September, you can see that the calls get both more bullish and much heavier, right? These are up in the 50, 60,000s. Max pain point here is probably the same, more or less where we are. But again, max pain does tend to follow price around a little bit because that's where the at the money is, right? Because it's obviously that's where options are the most expensive when you're actually close to the price. And if we roll this thing out to year's end, you can see there's still some real speculative buyers. I mean, to be honest, we've kind of died off on the 100Ks. There's a lot more down here at the 40K to 60K. Again, it feels like a more sophisticated, more sensible, more sane. I mean, if we got to 60,000 this year, I personally wouldn't be too surprised, right? I mean, like it would be a very obviously powerful performance, right? It's a 2x from here. But it's kind of on my bingo card. It's certainly a possibility, right? And so is chopping sideways doing absolutely nothing. But to be honest, given the kind of macro environment, I wouldn't be like, these are feasible numbers. 200K, 100K, yeah, maybe not, right? Not quite on my bingo card for 2023. 60K, I mean, it's feasible, right? These things are not impossible. It's within the world of possibilities rather than impossibilities. So anyway, to me, the whole story here speaks to a healthier leverage, a more mature market. And quite frankly, I actually like what I see. I think this is quite positive. I think it's healthy. So yeah, I think that's a good starting point. Right, now let's just quickly jump into the on-chain space. As I mentioned, I want to look at basically things on a supply basis. So now that we've kind of established that what's going on in the derivative space, let's do a quick snapshot of what's happening in the spot. If we look at exchange balances, sorry, this thing is still loading and trying to work itself out. The amount of balance on exchanges, it just wants to go down. This thing just keeps trending lower. People are buying, people are pulling coins off exchange. I am simply yet to see a negative shift. It looks healthy, right? It really does look quite sound. So it's good to see. We can see Binance actually had a fairly substantial outflow when all that chaos was going on. I mean, that's kind of gone to crickets, hasn't it? We'll see what happens there, but it's starting to climb again. It's not far from the all-time highs, to be honest, in terms of Binance's balance. You can see this here. This is our inflows and outflows, this kind of belling out of these two. To me, that's energy. That's energy. That's excitement. We're back alive. Like, things are happening again. Coins are flowing in and out. There's still more coming out than in, which is kind of good to see. But this is energy. I like to think about these kind of in and out flows as the pulse of the market. You want to see volume. You want to see trade. You want to see stuff happening. And I think this is, whilst again, very, very early, I mean, we're only talking about a month at most where things are starting to actually, it's breathing, right? It's alive. It's almost coming back, right? Which is excellent to see. Here we are, exchange volume momentum. Just to put a pin on this, I mean, so the reason I like this particular metric, exchange volume momentum, is it's basically looking at all of the inflows and outflows. We know that Bitcoin is traded on centralized exchanges where most coins are traded, right? That's just the reality of the situation. Coins flowing in or out, right? If someone's moving peer to peer and someone's shuffling their wallet and Binance is doing some stuff, I mean, yeah, okay. But if people are sending coins in and out of exchange, that's meaningful volume. So that's what this is tracking, the monthly versus the yearly of actual exchange flows. And I mean, this is great. I mean, this is powerful. This is now a serious and true uplift. And you can see we've been chopping around under this yearly for, I mean, over almost a year and a half now. What is this? Back to July 2021, 2 years. 2 years have been chopping around in here. And this thing goes right off the back of the BlackRock news. Same time that we've got that belling out of our inflows and outflows. This is wonderful stuff, right? This is great. Now, this one here is actually really interesting. I really like this chart. This is our exchange average withdrawal price based on just starting from the 1st of January. So kind of like yearly cost basis. It's probably the best way to think about this. Now, we are above everybody except the poor sops up here in 2021. So if you joined in 2021 and you kind of bought up here when Elon was buying, you're pretty much the only cohort in Bitcoin existence who is probably still underneath their cost basis, which is currently at 35.7. I mean, every bear market is brutal. Here's the 2018 line, by the way, right? So 2018 didn't break even until well and truly into the 2019 rally. So we've been here before, but also the 2019 rally, right? We're kind of halfway by this metric, right? We're at a price of, let's say 7K, 7K. So if you think about that, that was the floor. I mean, Bitcoin's poetic. We're kind of at the bottom of the range low, right? This was kind of the $30,000 floor that set the 2021 market. The 2018ers didn't break until we finally got above that level. Granted, they got tested and tested and tested for all of the next year, but we're kind of in that level. But, and also here's a great little example. Check this out. So it's probably a bit too zoomed in. Let's go 2 years. So we talk about the short-term holder cost basis. Well, the short-term holder cost basis is perfectly surmised by people who are buying in 2022. Look at this great little support it keeps showing, right? I mean, these things keep playing out time and time again. It really is great stuff. Okay, so last thing I want to check in on is entities, right? So we've established that coins are still coming out of exchanges, all right? Who are these crazy people? Why are they buying this thing? And are they buying it at scale? And the answer is yeah. I mean, they really are. Like, people are truly accumulating this thing. We can see here that we have the shrimp are just can't be stopped. This thing just keeps pushing higher, right? These levels, I mean, they're consuming here 32,000 BTC a month. Give me 1 second. 900 coins times 30 days. And there's 27,000 coming out of miners. So the shrimp alone are sucking up more than all of the coins coming out from miners. So, I mean, at some point in time, I mean, the halving is coming up in 308 days, I think it is. And the shrimp are just buying all of it, right? Crabs also buying a whole bunch of it. They're buying at 21,000, 22,000 a month. I mean, mine supply is 27. These guys have got 22, so we're just below mine supply there. If we look at it on a actual absorption rate, if we combine shrimp, crab, fish, everybody with under 10 BTC, that's going to capture the majority of retail, right? Because some retail will have more than 1 BTC because they've been accumulating for many years. Some will have more than 10. Some are actually like, some people just happen to have a couple of $100,000 sitting around and they need to allocate it, right? Retirees, people who sold a business, kind of just normal people who just came into some money. That whole cohort, right? Everyone with under 10 is stacking sats at a rate of 230% of mine supply, right? So for every coin that's mined, 2.3 come off the market. Supply shock, right? It's going to happen. It's just the buy. And I think the most important thing to see here is we can see the trend shift, right? The accumulation strategy of these crazy people has only accelerated as the market sold off. People learn, right? Michael Saylor's over here. People start going, wait a second, this thing's actually real. This thing's really going to potentially change the world, and companies are going to put it on their balance sheet. And, it's surviving all of these things. And we had a deleveraging and it didn't die, and FTX blew up and Bitcoin's still around. How do all these things come together? I mean, this here is stacking sats like we've never seen. Let's pull back to all history here just to put this into perspective. I mean, who are these crazy people, right? The scale of accumulation that we're talking about here. And by the way, this here is not indexed to anything. So if we're going to compare it to mine supply, remember that mining, I actually should chart this. Imagine you've got your issuance, your monthly issuance, right? You get your first halving, it drops half. You get your second halving, it drops again. You get your third halving, right? The halving amount keeps going down. This here is higher, well and truly, than the amount of mine supply right now. So it really is quite extraordinary, the sheer volume of coins that people are buying. And this is as the market's trending higher. So again, it feels really good, man. It feels really constructive. I like what I see, pretty much across the board. Whales starting to distribute, good for them, right? Sell your coins. Don't I? To be honest, people get concerned about whales. Sell, guys. That's your job. Your job is to distribute. And by the way, inside all these whale pools, it also includes all the micro strategies, the GBTCs, all the big dogs, like the actual ETF products, which have hundreds of thousands of owners. Um, I want to see whales distributing their coins. To me, that's what Bitcoin's all about, right? Flush those coins out, and the shrimp are well and truly more than taking them off their hands. So it's great to see. Here's whales, right? Whales are putting a huge amount of volume into exchanges on net, right? So again, I don't particularly know how. I mean, I've never been a huge fan of tracking entities, being like, oh no, look out for the whales. I like looking at things in a macro scale. I think it gives us a much clearer view of what's happening. When we're looking at the whales, I mean, I'm not particularly that phased about, when I see them distributing, what I actually care about is Bitcoin being distributed. And to me, that broad audience is essentially the kind of people who are going to benefit the most from it. And given this chart, right? This to me, this chart here, this is Bitcoin Education 101. This is the result of thousands and thousands of hours and effort of podcast and education and conferences and conversations and news articles and all the rest of it to be buying this strange, weird internet money, following the absolute carnage of 2022 and then into the regulatory storm that we've seen in 2023. These people are serious, hardcore Bitcoiners, and they're not going anywhere. This is actually my favorite chart in all of Onchain right now because I think this describes Bitcoin education and the impact that it's had. People get it, and people are not willing to let it go. And I think that's a really, really powerful story. And I've just not seen this for any asset ever. I think it's remarkable. So anyway, a little bit longer than I had planned, but hopefully you found that session useful. Do give me a thumbs up or a thumbs down on the new slides. I'll continue to iterate and change them. But yeah, it was well and truly time to update them. So thank you for putting up for the blue for so long. Anyway, I will catch you in the next one. Have a great week. Cheers.